Yes, good afternoon all. Welcoming you all for the Tax Talk 54. So the main topic with respect to year-end is filing GSTR9 and 9C correctly without getting the department attention. So I am sure majority of you would have almost completed GSTR9 and 9C and would have been in the verge of filing GSTR9 and 9C. Today, we'll just discuss what are the points we should double check before proceeding to file. We all know that GSTR9 in itself doesn't automatically create any liability. Like in which way I'm saying is, while filing GSTR3B, we can only file GSTR3B after paying the liability. But in GSTR9 or 9C, it is not the case. Even if you file the entire turnover as unreconciled turnover, it will allow you to file. But the major problem is the department will then issue notices and will follow up us, and they will regularly going to department person. They are always of the perspective saying that even if we have filed GSTR9 and 9C owing to some clerical errors, they are always taking a stand to say that we have only admitted that that there is a difference. So we should definitely pay that liability and then only close the case. So in that scenario, GSTR9 and 9C becomes a significant part to file correctly, to know which columns we should have a nil difference and which columns may have a difference. The GST Act in itself doesn't anywhere imply that certain differences should not be there, certain differences should be there. It's a very simple form which was given way back in 2017-18, which was not majorly tweaked also. It came live in October last week only for this year. Usually it will come live around September, but this time they have given the portal only belatedly. Table 8A has populated much belatedly only. So couple of weeks back itself, our CTO Jayamohan would have addressed you regarding how to file GSTR9 and 9. So today I am just going to touch upon how we are going to file GSTR9 and 9C, because without that I cannot dwell on the part on which we should file, on which column we should file correctly. So that I will run through it again, and I will stress upon the table on which there should be nil differences, and which, if there are differences, what it would imply to the department. So without much ado, I am diving into some basic things to start with. So first thing is, we should file GSTR9. Any person, any registered person who has taxable turnover more than 2 crores should file GSTR9. Any taxable person who has more than 5 crores turnover should also file GSTR9C. So without filing GSTR9, you cannot proceed to file GSTR9C. So the first thing what we should do is file GSTR9. The due date of which is December 31, 2024 on Tuesday. So the main thing, the summary of GSTR9 is, first there are Part 2, Part 3, Part 4, Part 5 and Part 6. For Part 2, we should give outward supplies and inward supplies which are liable to RCM. Part 3, we should give our ITC details. That is, these much purchases I have made, through that I have availed these much ITC. This is the breakup of input services and capital goods. This is the input ITC. Like that, we should give the breakup. Part 4 is a summary of what you have given in Part 2 and Part 3. So these three parts form major part of GSTR9, the basis of which majority of the notices are issued by the department as of now. So going into it, GSTR9 cannot be filed without filing all GSTR1 and 3B of financial year 23-24. For financial 23-24 it is because of the fact that only if you have filed March 2024 GSTR3B, your GSTR9 will be enabled. Without filing GSTR3B of March 2024, we cannot proceed to file GSTR9. The GSTR9 itself will be disabled. So any missed out liabilities can be reported in Part 2. For example, if you have reported only around 5 crores turnover in GSTR9 and your actual turnover is 5.3 crores upon closing of books of accounts under the Income Tax Act, any missed out liabilities can be reported in GSTR9. As I already said, the GSTR9 itself doesn't automatically create a liability to make you pay the tax before filing GSTR9. It will get filed. After that, you have to initiate a DRC03 voluntary payment, or otherwise the department will issue notices on the differences noted in GSTR9. But similarly, if you ask me that if any unavailed ITC, sir, the ITC in my books was around 2 crores. I have only availed ITC of around 1.75 crores. Can I avail the remaining ITC of 0.25 crores? The answer is straight no. Because we all know, as per section 16 subsection 4 of the CGST Act, the last date for claiming ITC is 30th November 2024 for the financial year 2023-24. Adding to that, the return in which you can claim ITC is only GSTR3B, and GSTR9 will not provide you any ITC or will not cause any changes in electronic credit ledger. So any missed out ITC is missed because the due date is also over with respect to section 16 subsection 4. Therefore, any missed out ITC, we cannot claim ITC, fresh ITC in GSTR9. So keeping in mind these two, we can start the table wise breakup of GSTR9. So I have given you the table. This is for reference purpose only. This is not at all. This is not at all this much clarity, or this reference is not given anywhere in the GST Act or in the portal or anywhere else. This is just an internal reference that we have, so that we match our entire GSTR9 or 9C with the GSTR1 or 3B that we have already filed. So as I already said, part 1 is basic details. Part 2 of GSTR9, in part 2 of GSTR9, table 4 asks taxable turnover. Table 5 talks about exempted turnover. So table 4A, 4B, 4C, it has various breakups. I have given the reference to returns. The PPT will be shared after the webinar. I think this would have already been have been discussed by our CTO a couple of weeks back. But a reference to GSTR1, you please, before filing GSTR9, you check that whether in these columns, if you are not declaring any fresh liability, you please check to the fact that you have taken reference only from these returns. For example, if B2C supplies means it would have been reported in GSTR1. So from that table, you take that reference. Then only there will be no difference at the end of the table. So table 4H, 4I, the most common error that is done is many taxpayers are ignoring to file table 4I to table 4L, in the sense that they are not filing the credit note, debit note breakup at all. We should definitely file that breakup. The department has relaxed while saying that the entire liability can be that adjustment, table 4I, 4J, 4K adjustment can be reported consolidatedly. But please don't fail to report it and all, because many taxpayers, I have noted that in table 4 itself, in the table 4A itself, they are netting off and reporting. It is a good practice to report it separately in table 4I or table 4J or table 4K. So common FAQs relating to the table 4 of GSTR1 is GSTR9 is, can any invoices not reported in GSTR1 or 3B reported in GSTR9? As I already said, here GSTR9 we are not giving invoice-wise breakup at all. We are giving only the consolidated figure as in GSTR3B. In GSTR1 only we would give the invoice-wise breakup. So you cannot specifically report that invoice saying that I have missed bill number 42. I am reporting that bill number 42. You cannot include that, because ultimately why we are intending to report that bill number 42 separately means it should go into the GSTR2B of our customers. But GSTR9, as I already said, will not cause any impact in GSTR2B or electronic credit ledger for that matter. So you can consolidately add the figure in table 4 and you can declare additional liability if there are any. But you cannot report any invoice-based details. Consolidated figure only can be reported. So if there are any additional invoices to be reported, you please add that figure in table 4 and report it. At least in what we have missed out to report in returns, at least we can claim to the department that we have already reported in GSTR9. Otherwise, penal provisions will be initiated sometimes underreporting of transactions in that category, penal provisions will be initiated. In that case, it's a good argument to say that we have already reported in GSTR9, so we are not intending to underreport any transactions. But please note the fact that if you are reporting any liability, immediately pay it in DRC03 also, because if there are any differences, straight away IIT notices are coming. So you please don't forget to file DRC03 on additional payment. Next thing is, if can any credit notes not reported in GSTR1 and GSTR3 be reported in GSTR9? See, credit notes, with respect to credit notes, only if you report in GSTR1 and report in GSTR3B, you will get the benefit of the credit note, that is reducing the liability. It can very well be reported in table 4I. That's not at all an issue. But the benefit of credit notes will not be given. But the benefit of, you cannot say that I have reported in table 4I, but missed to report in GSTR 1 or 3B. You cannot say that if you can reduce the liability at all. While reporting, any benefit in GSTR 9 will not be given. Straight answer is any benefit will not be given. Any additional liability you can very well report in GSTR 9. I missed to show a B2B invoice in March 2024 as the last date to show invoice in 13/11/2024. I have missed to report it in GSTR1. Can I show it in GSTR9? As I already said, invoice-based details cannot be reported in GSTR9. You are only going to give a consolidated figure. Therefore, the exact problem of you not reporting the B2B invoices, that is, you should get it reflected in GSTR2B of our customer. That will never happen through GSTR9. But you can definitely declare additional liability as I already said and pay the tax via DRC03. Next, I reported an invoice and paid tax in GSTR3B, but failed to report it in GSTR1. Can I report it in GSTR9? The same answer applies here too. You can very well report it in GSTR9, but you can only add the liability or match the liability with GSTR3B. You cannot give an invoice-based transaction in GSTR9. Therefore, the point of getting the invoice reflected in GSTR2B of customer will not happen through GSTR9 at all. Next is bad debts recovered shown as income and profit and loss account, whether it forms part of table 4 of GSTR9. No, generally bad debts recovered because they already you would have paid GST for that. You would have not subsequently claimed any benefit under GST Act. You would have claimed benefit only under the Income Tax Act. So any bad debts not reported, you need not report it again. If you have not reported in the corresponding year, you report it here. But otherwise, it's not needed because the liability would have already been discharged in that year. So next, table 5. Table 5 talks only about the outward supplies on which tax is not payable. Export without payment of tax. SEZ without payment of tax. Exempted, nil rated. So in this table, you have to report only the transactions on which tax is not payable. So one thing I would like to add here is export without payment of tax means if you have reported here as export without payment of tax or in GSTR1 returns means the department will definitely check whether you have an LUT or you are eligible to export under LUT. So you please export with payment of tax will go in table 4 because you are paying tax on that and getting refund. Only export without payment of tax will come here. Another important thing about table 5 we should remember is if you are reporting anything as exempted or say for example table 5D or table 5E exempted or nil rated, immediately the department issues a notice saying that you should reverse common credit under section 17. This is because if you are doing both taxable and exempted goods, the common credit, for example the rent, the telephone bill, the ITC accumulated on that, you should compute and make a common credit reversal under Rule 42 or Rule 43 in the GST 3B returns itself. So if you are reporting any exempted or nil rated supplies here, except that of two things. One thing is if you are getting any bank interest, then common credit reversal is not required. And if you are selling duty credit slips, export benefit, the duty credit slips, in that scenario also common credit reversal is not required. In all other scenarios, you please be mindful of the fact that if you are reporting here you should make a common credit reversal under Rule 42 or Rule 43. If you have not done it in GSTR3B returns, you please do it at least now, because the interest gets accumulated. The department will definitely issue a notice when you have reported some transaction, even if it is interest, because here there is no specific provision for you to say that what is the exempted supply. You can only report the total value of exempted supplies. So even if you report here the FD interest as exempted supplies, FD or FD interest as exempted supplies, the department will straight away issue notice saying that you are liable to a common credit reversal under Rule 42 or 43, and you have not done that. So you please be mindful of the fact that if you are reporting any transaction in 5D or 5E, please make a computation under common credit reversal and reverse it to DRC03 then and there. The next thing is similarly for non-taxable transactions also, the credit note, debit note amendments, it can combinedly reported. So the main points requiring consideration in table 4 and table 5. Majorly, the taxpayer wishes to note these points. See, in earlier years, at least during the initial years of GST implementation, say for example 2017, 18, 18, 19 and all, the department was intending to give a relaxation for wrong filing or misreporting in GSTR9, but after 7 years, the department is not at all ready, because any deficiency, they are claiming that we have only admitted the deficiency through GSTR9 and the tax should be definitely payable. So therefore, please note these critical points before filing GSTR9. Double check the fact that if there are any differences, that there are no inadvertent errors. If there are any differences, it means that you are declaring a difference and you are definitely going to await a notice from GST department. So the first thing with respect to table 4 and table 5 is in the table 5N, in the last table, you will get the total consolidated value of IGST, CGST, and SGST. You have reported in the table 4 and table 5. That will not get auto-populated from GSTR1 or 3B itself. It will be the total of what you have reported. So the IGST, CGST, and SGST reflected in table 5N will be cross-verified with our liabilities declared in GSTR3B. For example, I am reporting an IGST liability of 1,50,000. They will definitely check. You please download the GSTR3B summary that is available within the annual return tab. In that, you please match whether you have declared an IGST liability of 1,50,000. If these two figures, the table 5N and the GSTR3B liability doesn't match, automatically notice will be issued and you will be liable for a payment. Because as I already said, this is like you are willingly declaring the liability. It's not that the department has asked you to pay this liability. It is like you itself willing to pay the liability via GSTR9. So definitely, if there is a difference, you please note that if the difference is intended, there should not be any differences if you are not declaring any additional liability with, only relating to GSTR1 and 3B. Therefore, you please note this table 5N should match with the GSTR3B liability that you have declared throughout the financial year 23-24. The next thing is sale of securities. There's a common question whether sale of securities is to be reported, because in sale of securities, the profit on sale of securities will come under profit and loss account. There's a question whether it has to be reported in GSTR9. It need not be reported in GSTR3B or GSTR9 in my opinion, because it is not at all goods or services as specifically given in the CGST Act. So the sale of securities many people have. You need not report that sale of securities or profit on sale of securities in GSTR9. So the next thing, I would claim this to be a villain of GSTR9, because these are the main part, because to our knowledge, many people are not declaring any additional liability in table 4 and table 5 itself, because they are declaring what is in GSTR1 or GSTR3B. The figures will be automatically auto-populated in the portal. It is editable, but it is auto-populated from GSTR1 or 3B. So therefore, many of them declare what they have declared in GSTR1 in table 4 and 5. So table 4 and 5 majorly doesn't have many bigger problem as GSTR as table 6 to table 8 in GSTR9. With respect to table 6 to table 8, even yesterday also, GST has issued some advisory and asked us to see in which table, in which ITC should be, which ITC figure should be given. So brief part is a major contributor to this confusion is circular number 170. We all know with effect from July 2022, our GSTR3B filing itself was a little bit tweaked. Because before that, many of us would have had a practice to report credit notes in table, credit notes as reversal, or sometimes net off the ITC, ineligible ITC, and report the net eligible ITC in table 4A. So many things were done like that, but in July 2022, circular number 170 has clearly specified in which table we should report which ITC with respect to GSTR3B. I'm not talking about GSTR9. I am talking with respect to GSTR3B. In that, they have specifically said table 4. In table 4 of GSTR3B, you should report only the ITC, only the gross ITC which is reflected in GSTR2B, irrespective of the fact whether it is eligible or ineligible. So even if the ITC is 1 lakh and you are eligible only of ITC 80,000, for example, 10,000 is ineligible ITC and 10,000 is ITC for which goods you have not received it till the month end. In that scenario, also in table 4A, you should report the entire rupees 100 ITC and you should reverse it in table 4B1 and table 4B2 and bring the net figure in table 4C, which will ultimately get reflected in your electronic procedure. So, in that scenario, what is the problem with respect to GSTR9 means the table 6A in GSTR9 is an uneditable field that is auto-populated from table 4A of GSTR3B. What impact does it have in our table 6 reflection is table 4A, as I already said, from July 2022, if we had followed the circular of circular number 170, we would have reported the ITC gross of reversals without subtracting the reversals in table 4A. In that scenario, the entire ITC, that is including the ineligible ITC, will get reflected in table 6A. So, if you are giving ITC in table 6B, we all know that from table 6B to down under, we should give the breakup of ITC. In that scenario, if you give the breakup of only eligible ITC, there is a clear difference between table 6. Because table 6A, as I already said, only gets the ITC, gross ITC, doesn't factor the reversals which we have made in GSTR3B. You please check with GSTR3B summary. Table 4A is the gross ITC we have reported, including the ineligible ITC. Even if there was a motor vehicle ineligible ITC, we would have reported in table 4A, and we would have claimed it as reversal in table 4B, and then table 4C ITC, which is the net ITC available, which would have been transferred to our electronic ledger monthly through our GSTR3B monthly returns. So, what ITC is reflected in table 6A? This is uneditable. This is auto-populated. This is uneditable. What ITC we have? What ITC gets automatically reflected in table 6A is the ITC, which is the gross of reversals. It doesn't net the reversals. I am repeating the fact that it is reporting only the gross of reversals. So the ITC breakup which you have to give in table 6B, that is, you have to give as input services, capital goods breakup ITC, which you would have never reported in GSTR3B in the first place itself, because we would not have given the breakup of input services and capital goods in GSTR3B. Only during refund calculations we would give that breakup. So in table 6B, we should give the breakup of input services and capital goods. Upon which we have a relaxation of to report input and input service ITC together in inputs and only demarcate the capital goods ITC separately. So table 6B, 6D follows the same procedure. 6D follows the same procedure, but you please keep in mind the fact that we should report only the gross ITC. That is including ineligible ITC. Even if there are any ineligible ITC, you please report it in table 6B. Otherwise, the state difference will come in table 6, which you could not substantiate, which you wouldn't be able to substantiate in the department in the future. So you please give the gross ITC. Gross ITC, I mean, including reversals. Even if there's a motor vehicle ITC, you separate it into inputs or input services, and you give that breakup. So that is the first set of discussion with respect to filling table 6B. Table 6B is of utmost importance because table 6B is the ITC which you are declaring as eligible to the department, which you are declaring as ITC which pertains to you, to the department. That is table 6B ITC only, it's in my books. Like that, you are intimating to the department. So filling table 6B ITC is of utmost importance. The next thing is in table 6 sketch. In table 6 sketch, reclaimed ITC column will be there. In table 6 sketch, reclaimed ITC column will be there. Here, generally, if you have reversed any ITC and you have reclaimed it, we all know that for ITC reclaim, there is no time limit. So if you have reversed any ITC owing to the fact that the supplier has not filed the GSTR9 returns, or you have not paid to the supplier within 180 days, for that matter, you have reversed that ITC and you have reclaimed it in financial year 23-24, then that ITC should be reported in table 6 sketch. Another important thing is you also please include the ITC which was reversed and reclaimed during the year in negative figures, because as I already said, I will just run through a simple example. For example, you have an IGST ITC of rupees 100. You have not received the goods in that year, in that month, for rupees 10. So your eligible ITC for that month is rupees 90. In that case, GSTR2B reflects 100 rupees. Therefore, in table 4A, you should report an ITC of rupees 100. In table 4B2, temporary reversal, we commonly call it as temporary reversal. In table 4B2, you will report the 10 rupees, and table 4C will reflect 90 rupees, which will get ultimately carried to the electronic ledger. 90 rupees is your eligible ITC, and you are getting that carried to the electronic ledger. The problem is, again, you should claim this table, the 10 rupees ITC, because that is not an ineligible ITC. It was reversed only due to the fact that you have not received the goods within the month end. Because as per section 16, only after the receipt of goods you can claim the ITC. Therefore, you have not claimed the ITC in that month, but subsequently it is eligible. That is why you have put it in table 4B2 temporary reversal in the first place. So you are again going to claim it next month. Similar example. Next month 100 is in GSTR2B. 100 is also eligibility. For the simplicity of understanding, I would say 100 is also eligibility. In that scenario, in table 4A, you should give rupees 110, because then only you would be eligible to claim that rupees 10 ITC which was reversed in the previous month in table 4B2. So net in table 4A of first month, you would have reported an ITC of 100. In table 4A of the next month, you would have reported 110. You would have claimed only ITC of rupees 200, but in table 4A reflects the value of 210 because of the reporting procedure envisaged in circular number 170. In that scenario, if the portal compares our 2A GSTR2B ITC with our ITC claim in table 6, there will be a clear difference, because in GSTR2B, in our example, 200 was the ITC in reflected in GSTR2B, but we have put rupees 210 in table 4A of GSTR2B. So there will be a clear difference of rupees 10 rupees. To counter that, you please give the reclaimed ITC. You please give the reclaimed ITC of rupees 10 in negative in table 6. In negative in table 6 sketch. So table 6A and table 6B to 6C will always match. You please note that table 6A and 6B to 6C will always match. Table 6 sketch in reclaimed ITC, you should put a negative figure. So if you put a negative figure here, I would just jump on some slides to explain the relevance of this, because table 8B, that is the comparison between GSTR 2B and GSTR 9, GS table 6 and GSTR 9 happens in table 8B. In table 8B, that field is also uneditable, but it fixed the values from table 6B and 6H reported above. So only if you report it in table 6H reclaimed ITC in negative, it will net off table 6B and 6H and will give the 210 minus 10 rupees, 200 rupees in table 8B. Because we have seen a flurry of notices of differences in table 8, which is not at all, at least in the early notices stages, it is not at all solvable, because there is a clear difference between GSTR 2A and GSTR 3B if we see the table 8 of GSTR 9. So the department is spellbound on the fact that there is some difference between GSTR 2B and GSTR 3B. At least in the earlier years, there was some relaxation, there was some playful activity saying that 10% can be claimed, 20% can be claimed. The ultimate purpose of that was differently interpreted by various people. But now there's in the financial year 23-24, for which we are filing GSTR 9, there is a clear understanding that only the ITC reflected in GSTR 2B you can claim in GSTR 3B. There is no fact that you can claim up to 5%, up to 10%, or in GSTR 9, GSTR 2A. No dilemma in that itself, because the law is very clear to say that in the financial year 23-24, only ITC that is reflected in GSTR 2B can be claimed. So if there are any differences in table 8, please be prepared to pay for that, because there would be no recourse in the future to say to the department that we have not intentionally declared the difference there. Table 8D, I am coming to that in the next slides. But table 8D, the relevance of table reclaimed ITC reporting is in table 8D. That's why I was forced to skip some slides there in between. So in table 6H, you please note that you have to report ITC which was reversed in table 4B2 and subsequently claimed in the financial year 23-24 itself in table 4A5. So to very simply understand, whatever you have declared in table 4D1, 4 Delhi 1, that you should report in negative in table 6H. So in table 6J will show a difference. Will show a difference of what ITC means. The ITC which you have reversed and reclaimed in the same year, that difference will be shown. That is okay. That is okay. Because I have a big headache. See, as I already said, this is the form that was prescribed in financial year 2017-18. Of course, the form needs some tweaking, but as of now, we have only this form live. So the intention of the department while introducing this form was very different than what it was used for now. So there will be some, however you report, there will be some difference in table 6 or table 7 or table 8. There will be some difference. But I would prefer there is no difference in table 8, because it clearly intimates the fact that we have it gives the department view saying that we have claimed excess ITC in GSTR 3B than GSTR 2B. So it is better to have a difference in table 6J, which we can ultimately prove to the satisfaction of the department that it was reversed in table GSTR 3B. In that summary, table 4D1, we would have given that if these both figures match, the department will get a very good understanding of what we have done, and there will not be any unintentional tax liability at all. So the next thing with respect to this is table 6H will give the table 6J would give the difference between what is the ITC reflected in GSTR 3B and what the breakup we are giving now. So as I already said, there will be some difference here. That is okay. Please note the fact that it should be the difference what we have given in table 4D1 of GSTR 3B summary, that is reflected in the annual return tab of GSTR 3B summary. So in table 6G, if there are any differences, the department would definitely ask the reason for the differences. You should substantiate it by saying that table 4D1 has the same difference. Therefore, what the reclaimed ITC only we have given here, that we can definitely prove to the satisfaction of the department. From the limited interaction we have already had with the department for the earlier years, at least for the financial year 22-23, we are able to prove that if you are going by this perspective, we are able to prove that we have done the right thing, and we could ensure that there are no additional liabilities in this regard. The next thing is table 7 talks only about the reversals. As I already said, only the reclaimed ITC was given in table 6. In table 6, we have reported only the gross ITC. So any ITC reversed during the year should be given here. You please refer to the table from table which you should see from the returns to get it filled here. So please report the reversals here. Table 7A to 7H is for reversals. Reversals due to various temporary reversals, permanent reversals, ineligible ITC reversal, common credit reversal. So everything will come under the context of table 7. So table 7J will have the net ITC available for utilization computed for you. Please match that ITC with your electronic credit ledger. In the electronic credit ledger, please download it in Excel for the entire 12 months from the April 2023 to March 2024. You filter the credit part alone. If there are any not PMT03A, that is refund recredit credits, filter the credit part alone. In the credit part, what ITC is coming there, that should match with table 7J. If that matches, I think we are all on the same page. So it will also be compared with table 4B1 of GSTR3B. Whatever reversals you have given, table 7C, 1 minute. Sorry. In table 7C, table 7C, 7D, 7E, that is rule 42 reversal, common credit reversal. Table 7E is ineligible ITC, which you should mention. That will match with the permanent ITC reversal in table 4B1. So if there is any deficit, the department will be of the view to say that you have reported these much reversals in GSTR9, which you have not ultimately done in GSTR3B. So the difference amount you should reverse it now. They can claim like that. So you please be aware of the fact that whatever you report in table 7C, 7D, and 7E of GSTR9 should match with table 4B1 permanent reversal of GSTR3B. So coming to the very important part, that comparison between 2B and ITC, what we have declared in GSTR3B. I am very sure at least 90% of taxpayers who would have filed GSTR9 9C for all the entry financial years would have received some notice in this regard. Please note that table 8D should not have any difference. Should not have, because if you have claimed ITC only with respect to GSTR2B, only for the invoices what is actually reflected in GSTR2B, you should not have any difference in table 8D. Please note that table 8B is uneditable. Table 8A and 8B is uneditable. Only if there is any positive difference, that is in table GSTR2B, the ITC has been reflected, but you have claimed it in April 2024. In that scenario means only table 8C has some value. That is also positive difference only you can report here. So table 8D will capture the differences 8A minus 8B minus 8C. So if there are any differences in 8D, you are declaring to the department that you have claimed excess ITC than what was already there in GSTR2B. So please be mindful of the fact that GSTR in GSTR9 table 8D table should not have any differences unless in exceptional circumstances, like you have not followed circular number 170 for the entry financial year. In that scenario, there might be some differences, but generally table 8D should not have any differences. And even if there are any differences, please note what is the exact reason for the differences now itself, because after 2 years or within 6 years, the department might issue a query regarding this. During that time, we would not be able to decipher because as in saying this, the GSTR9 form might be different in the next financial year. The reporting mechanism might be different in the next financial year. So you wouldn't be able to decipher what differences you would have exactly intended to get it in table 8D. So if there are any differences in any differences column, you please have a separate internal annexure. You for GSTR9 file, GSTR9 and 9C file, and you keep an annexure to that so that if any future queries come, you would be able to submit it and you can prove our non-liability. So next, with respect to IGST on imports, IGST availed on imports. IGST on imports and IGST ITC availed on imports. Many people only fill the IGST on IGST availed on inputs column. You please fill both table. You please fill both table because we all know in the tax liabilities and ITC comparison table there is a separate table for import ITC comparison. So if there are any differences, if there are not any differences there should not be any differences here too. So table 8A also should not capture any differences. So critical points requiring consideration here is difference. Table 8D differences means you are declaring to the department that you have claimed excess ETC with, compared to GSTR 2B. So you please be mindful before proceeding to file. If there are any differences in table 8D, you please take note of the fact. Table 8F and table 7E will be compared by the department. Table 8F is ITC available, that is motor vehicle ITC. It was reflected in GSTR 2B. We all know that even if it is eligible or ineligible, except the place of supply ITC, every ITC will get reflected in our GSTR 2B. We should only decide whether it is ineligible or eligible to us. So whatever ITC is in GSTR 2B, that we should get it reflected. That if we have not availed, that we should get it in table 8F. In that case, the department will scrutinize both table 8F and table 7E, because in 7E you would have reported the ineligible ITC. So they will check whether whatever you are claiming it to be ineligible, the ITC reflected in GSTR 2B, you would have reported in table 7E. For example, if you are in table 7, you are reporting that 1 lakh is my ineligible ITC, and in table 8F you are giving only 80,000. Then the department will ask the 20,000 you have not reversed, so you are liable for that reversal with interest. So the department will definitely match tables 8F and table 7E. If negative difference gets reflected in table 8I, that import difference I already said, right? In table 8I it means that the import ITC is availed more than import IGST paid. So whatever import IGST paid, that only you can claim it as import ITC. If there are any differences in table 8I, then the department will view it as some ITC you have not paid as import ITC, and you have claimed ITC relating to that. In that perspective, also notice being issued. So to summarize it, yesterday also, as I already said, there was an advisory in this regard. So to summarize this, I have prepared a table here. See, you please, anyway, PPT will be shared, but please have a screenshot of the table, because this is with respect to comparing three different activities. One is ITC accounted in our books of accounts. One is what it got, when it got reflected in GSTR 2B, and when it was ultimately claimed in GSTR 3B. So for different scenario, different reporting mechanism in GSTR 9 is required. So please, I'm not repeating that. What I have already said in what is the intention of what I have already said in table 6B and table 6, table 7 and table 8 is only I have consolidated and given here. For any references, you can please take a screenshot of it and follow accordingly. So I have summarized this too in table. So the intention of the department is to compare the gross ITC in GSTR 2B with the gross ITC that we have reported in table 4. So table 8A and 8B will both only have gross ITC. Table 8A and 8B will both only have gross ITC. not factoring into the value that we have reversed through GSTR3B or that is liable for reversal under section 17 subsection 5. So they are only comparing the gross. So you please give the gross values itself. The net value, the reversal value, we are separately, we are having a table to disclose it in table 7 or table 8 and all. So please have a view that the department is comparing only the gross values between GSTR2B and GSTR3B, and not the department is not bothered about the net values. They are seeing as two separate activities. One is comparing the gross values between GSTR2A and GSTR3B, what you have claimed and what you are declaring GSTR9. This is one comparison. Another comparison is what you have claimed as ineligible in GSTR9 is matching with GSTR3B and matching with their GSTR2A, because we have received a notice. We all have received a notice saying that in GSTR2A motor vehicle ITC is there, because GSTR3B we are never giving a breakup from financial year 2017-18 itself. Only the net value is given. So now the department is seeing only the GSTR2A, and if there are any motor vehicle ITC or any like ineligible ITC part, they are issuing a notice saying that you have claimed this. We should prove to them that we have not claimed this ITC, because prior to circular number 170, there was no clear clarification to say that where you have to report the ineligible ITC at all. So the department will take GSTR, the department will scrutinize GSTR2A and take specific transactions such as unauthorized agencies, Shiva tubes, Shiva steels, like that. They will take some transaction and they will say that these are ineligible. You should be able to prove the fact that if the transactions that in GSTR2A are ineligible, you have declared it in GSTR3B also, and you have declared it in GSTR9 also. So there are two separate transactions, two separate activities that the department is intending to do. One is comparing the gross ITC that is reflected in GSTR2B and GSTR3B and GSTR9. Another thing is the ITC they deem to claim it as ineligible, and our ITC reversal in GSTR3B and our reporting in GSTR9. These are the two activities that they wish to compare with respect to ITC part. So next thing is table 9. In table 9, one thing is if you have no differences, if you have no additional liabilities, the table in table 9, the column 2 is tax payable. Column 2 is editable actually. It will be auto-populated from GSTR3B, but it is editable. So what you are reflecting in column 2 should be paid through cash or should be paid through ITC during the year. Of course, these are uneditable fees. These are the summary of GSTR3B that you have filed throughout the year. So tax payable minus paid through cash minus paid through ITC. You please check these once, because as I already said, there is no provision in GSTR9 that if there are any differences that they will highlight it and show, or there will be a separate pop-up at all. So before filing GSTR9, please check whether cell 2 minus cell 3 minus cell 4 minus cell 5 minus cell 6 minus cell 7 is equal to 0. If there are any, you are not intending to disclose any additional liabilities. So any amendments, any transactions that you have, the transactions which are in financial year 23-24, if you are reporting in financial year 23-24 means that should be given in table 10 to 13. So if there are any tax to be paid, you should separately disclose it here and you should pay here. That's it. So some other FAQs are, can we claim refund through GSTR9? The one statement what I have said earlier, I would stand by that. Any benefit for the taxpayer, we cannot expect through GSTR9. Any liability for taxpayer, that can be very well be enforced by the department through GSTR9. Can GSTR9 be filed only after the payment of declared additional liability? This too I have already addressed. We cannot, the GSTR9 form will not enforce you to pay as in the case of GSTR3B. If there are any declared additional liability, it will allow you to file only if there are any late fees. If you are filing belatedly, late fees alone will be, the form will ask you to pay and then only proceed. Otherwise, any additional liability, it will not care at all. Whatever you declare, it will allow you to file, but subsequently, definitely, notice will be issued by the department, which, as I already discussed, the department will view it as what the declared additional liability, and they will not be willing to compromise on that. So can I claim unclaimed ITC in GSTR9? Any additional benefit, we cannot claim it in GSTR9. So what is the consequence of not filing GSTR9 by due date? Means up to 5 crore late fee 50 per day. Maximum late fee is 0.04% of state turnover. 5 crore to 20 crore means 100 per day, 0.04% of state turnover. More than 20 crore means rupees 200, 0.5% of state turnover. The bigger issue than this late fees and stuff is the department is viewing the belated filers of GSTR9 as non-compliers. So based on that, in many scenarios, audit is taken. The non-filers of GSTR9 or belated filers of GSTR9, departmental audit is taken. So it is better. Please work on it and file it within December 31. Of course, if you are not very clear on, or if you are working on it, don't file a half-baked GSTR9, because even GSTR3B, when we cannot revise, then there is no question of revising GSTR9. We cannot revise GSTR9 at all. Then whatever you have declared in GSTR9 additionally in favor of the department, you cannot substantiate it through anything, because you have already declared it. So it becomes a little difficult. So timely filing of GSTR9 is very important, but correct filing of GSTR9 is more important. So I'm just running through GSTR9C once. GSTR9 is of utmost importance. In GSTR9C, it is very simple. With respect to GSTR9C, only if you see the unreconciled turnover column, you would be able to figure out if you are mindful of the fact that there are no difference between values reflected in unreconciled column, because in every table there is a separate column showing that unreconciled turnover, unreconciled ITC, like that a separate unreconciled tax payable, like that a separate table is there. If you are not having any unreconciled difference, then it is okay. Otherwise, straight away the notice will come. If there are any unreconciled difference, I have seen many notices saying that the unreconciled difference itself we should pay. Like turnovers, for example, turnover 10 crores, we have reported 9.5 crores and 50 lakhs difference means the government has bifurcated it, the department has bifurcated it and asked us to pay 25 lakhs CGST and 25 lakhs SGST, 100% tax. So that scenario is not happening. You please check if there are any difference in unreconciled turnover in table 5R. For example, in table 5R, if there is any unreconciled turnover, please note it. In table 7G, if there are any unreconciled differences, please note it. So whatever you given GSTR9, if you could match the figures with GSTR9C, then only you would be allowed to file GSTR9C itself. Because if you have declared a liability there liability there is 10 lakhs, and here is a separate column in every table saying that as per GSTR9, in GSTR9 what you have declared, that also you should give here. In that scenario, if you say that there, if you had given 10 lakhs and if you give it here as 9 lakhs, in that scenario, the portal will not allow you to file itself. So if you can match only the figures in GSTR9, then only the portal will allow you to file. So I have given here the matching mechanism with GSTR9. Of course, this is the basic thing, because without this you cannot file in the first place itself. So after giving this, if there are any differences in unreconciled column, then as I already said, this we are intimating to the department that we are declaring some additional liability or declaring some differences. So in that regard, there would be no compromises from the department. We would be liable to pay that liability through DRC03 with interest or penalty, as in the case. So please note that only after filing GSTR9, you should file 9C. There is a common question saying that if the GST based turnover, suppose for example, I have two registrations in Tamil Nadu and Kerala. In Kerala, I am doing a turnover of 6 crores. And on the same point in Tamil Nadu, I am doing a turnover of only 50 lakhs. If in that scenario, we have to definitely file 9 and 9C. Yes, for filing GSTR9 and 9C, only the PAN-based turnover is considered and not GST-based turnover. Even if it is a nil return, you should definitely file. Then some common misconceptions and all is for that rent, recently, prior to 54 GST Council meeting, there was an amendment in reverse charge mechanism saying that renting of commercial property, if it is received from unregistered person, we should pay under RCM. So that is with respect to financial year 24-25 only. So for checking GSTR9 of financial year 23-24, that need not be considered. Common liabilities, that is this any RCM liability you have not reported in GSTR3B, you please report it. Any Rule 37A reversal that you have not made, you please do it in GSTR9. Any 180 days payment you have not made as per section 16, you please do it in GSTR9. Any double claim of ITC, whatever, because GSTR9 is an annual return given to rectify the deficiencies so that in future when the department finds, the interest cost will be lower when you find the differences now itself and rectify it. So please make it an exhausting process. If you have any query in filling up the form in GSTR9 itself, you please refer to the webinar organized by our Zentax a couple of weeks back, handled by our CTO CA Jayamohan. That is available in our YouTube channel. So you please refer to that. My intention was only to make the fact that certain tables you should be very careful of when filling before filing GSTR9 and 9C. So these are the common errors that I note many taxpayers are doing. So I kindly request you to please note it down and please never make that mistakes. We have already seen that there are some relaxation in prior to financial year 21-22 with respect to 9C. But I don't see any more relaxations coming from the department with respect to late filing or any other thing. So please try to file it. Please try to file the GSTR9 within deadline and also correctly. I think I have some questions. I'll just jump into the questions here. 1 minute. Alakasundram sir, in table number 6C, we have shown RCM inputs. Can I show again table 6H? Is it correct? In table 6C, we should, I'm sorry, in table 6C, you should not receive the actual RCM that we pay because I'm not sure if it is correct. Even for some goods, still unregistered person RCM is there, but usually the freight RCM, what we pay is should be reported in table 6D. In table 6H, it need not be reported because table 6H talks only about the ITC reclaimed. So if you pay the RCM, you definitely claim it in the same month or the subsequent month. That you will not reflect it in table 4B2 and reclaim it in table 4D1 and table 4DFI. So I am of the view that you need not report it in table 6H. Reporting it in table 6C is fairly enough. 60 or 60 for that matter is fairly enough. In table number 8D, difference is positive figure. Is it risk factor? Positive figure, it's not a risk factor, but different adjudicating officers look at different things differently. They are of the view that we are exhausting that ITC. So in GSTR2B, there is rupees 100 ITC. In table 8B, 90 rupees ITC you are giving. In table 8C, you are missed to reporting the 10 means. If you miss to report the 10 means, in table 8D, rupees 10 ITC difference will be as you say, positive figure will be coming there. In that scenario, the department saying that you have not declared that you are claiming it in table, you are not declared that you are claiming it in the subsequent financial year in table 8C. So you are exhausting this ITC. Table 8D, whatever ITC is reflecting it in positive figure, you are exhausting that ITC. I am not a fan of that view itself because GSTR3B is the enforcing thing. If you have balance in electronic reversal and reclaim statement, then it is fairly enough. Even that is not enforced anywhere in the law, but that is at least okay. But I would honestly say that in table 8D, if there is also positive difference, the department is of the view that there is something in GSTR to be, but you are not claiming it. You have not declared it also, claiming it to be in financial year 23, 24, 25, subsequent financial year. So that ITC is exhausted ITC, you ineligible ITC, or you are exhausting with ITC. So I would prefer a scenario where there's no difference in table 8D. If there are any right reasons, of course there's a difference. But in an ideal circumstance, there should not be any difference in table 8D, because whatever ITC is getting reflected in GSTR 2B, there is only 4 parts for it. One thing is you have claimed it. One thing is you have claiming it in the subsequent financial year. One thing is another thing is ineligible. Another three scenarios. One thing is you have claimed it. One thing is you are claiming it to be ineligible. One thing is next financial year you are claiming. So there would be only ideally 3 scenarios. So in table 80, there is positive figure, and if you know the breakup of that figure, and if you will not claim that figure in the future also, then it's not at all an issue. There can be positive figure. It's not very detrimental as compared to a negative figure, because negative figure straight away you would be liable to pay. So positive figure, it's somewhat okay from a conservative perspective. I hope I have answered the exact question you have asked, sir. Next, Raja, ITC for March 2022 to 23 is not shown in GSTR9. It was reported in April 23 GSTR2B. What should we do now? Sir, I really hope that you have declared in GS table 8C of table 8C of GSTR9, or at least in table 12 of GSTR9C in that financial year. If you have not done that, the only option for you to is show it under table 6H. The column is amount of ITC reclaimed. In that you can show, but there would be some queries regarding that. You should be able to explain to the satisfaction of the officer. So you please keep an annexure of what bills you have claimed in financial year 22-23. The bills you have March 2023, you have claimed in April 2023 TB. So please keep a note of that fact. Daniel sir, if we give reclaimed as negative in table 6 and reversals in table 9, net ITC in table 7 is showing negative. Sir, you are saying about table 7J, if I'm not wrong. Table 7J should not show negative, right? Because if we give ITC reclaimed as negative now, in table 6 itself, you are giving gross only. That is including the double claim of ITC. I'm saying that in table 6A and 6B2H should match exactly. That will include your reclaim. So subsequently, if you are reversing only in table 6H, reclaimed as negative, only a part of it, which is only the double claim, what the value is in 4D1, that is only you would be giving in table 6H. Sorry. So in that scenario, table 7 is reversal ITC. So anyway, it will have a negative impact. That's not an issue. But I'm not able to get why you are getting negative ITC in table 7J altogether. It should not be the case at all, because I'm saying in table 6, the table 6H, the negative value should get included in table 6B2D. So in that case, it should not be the scenario. You please reach out to us. It would be better if we can see the figure and I could understand your perspective much better. And next, sir, every time even after. Okay, so I will note this mail ID definitely. I will send the PPT. I will ask my team to send the PPT to this mail ID in particular. Thank you. Vijay Raj. Yes, sir. Hi, sir. Whether duty drawback is not shown in 3B, however, can it be shown fully in 5B? Sir, duty drawback is not all a supply, so you need not show. Export benefits is you cannot claim it as supply. So whatever the heading itself, details of advances, inward and outward supplies made during the year. So it is not at all a supply in the first case. There is only consideration. There is no activity. So I think it need not be reported in duty drawback. If you are reporting it, there is not at all an issue. You can very well report it. It is not a big error. But be the government will definitely scrutinize it. Whatever you are giving in table 5, if you have rightfully reversed the table, reversed the rule 42 and 43 reversal, the government will definitely check upon. So you please be aware of that. Thank you. In case of Jayprakash sir, in case of multi-stage GST party for Form 9C, Table 5A, turnover as per audited financial statements should only relate to the concerned state which is filed or consolidated turnover. Jayprakash sir, this is a common question that is being asked. Our perspective is, if there are multi-state GST, for example, there is a turnover of ₹100. There are registration in 10 states, equal turnover, 10 rupees turnover. I would report only ₹10 in table 5A. So if the department adds all our GSTR9C, they would get a total of 100, which will match with our consolidated P&L account. That is one part of your question. Answer to one part of your question. And you also asked which balance sheet and P&L to be attached with 9C. I would prefer to attach the specific state financial statement. If it is audited, if it is separately audited, it would be better if you give the specific state financial statement. Or in some scenarios, we see that the party only has consolidated financial statement. In that case, we are uploading the consolidated financial statement also. But even if you upload the consolidated financial statement, you please attach. It would be advisable also to attach a reconciliation that in this 9C we have reported this much turnover, which will match with our consolidated turnover. For every 9C, if you attach this, it would save much time for the department too and for us too in the future. So that would be advisable. But if you have a state-specific financial statement, it's well and good. You can attach it. Thank you, sir. Thank you very much, Alex. Sir. Kilesh, sir. Sir, I had one doubt apart from one of our case. The error came regarding not allowed to file GST due to non-filing of my monthly return. In my case, we filing order, we raised ticket against this. Sir, you please reach out to our team, Akhilesh, sir. Because we have not seen any scenarios. There was one such scenario for one of my clients. GSTR9 was not enabled, but same before 2 weeks we had given a grievance and now it is solved. Now the GSTR9 is enabled. So I thought, so that's why I didn't specifically talk about that the complexity. I thought if grievance is given, it is attended. If it is not, you please reach out to our team. We would see what we could do from our end. Madhu Perindiri, yes. If the difference in table 6J is equal to table 4B2 of GSTR 3B, then no issues at all, right? Because of the temporary reversal. Table, yeah, there should not be any. Yeah, if it matches with the table 4B2, that is okay. If the differences in table 6J is equal to table 4B2, that is okay. That is an alternate view, because I said that you better put it in table 6H and so that table 8 gets reflected correctly. But to answer your question straightforwardly, if the difference is only pertains to table 4B2 of 3B, then it's okay. Because the reclaim will come a double time in table 4A. That will be reflected in table 4.2. That is okay. That is definitely okay. Then is it disclosed in 9C for reconciliation? Yes, sir. I would prefer you to disclose there and give a comment saying that in the reasons there is a separate box to fill reasons. In that you can give that this is a duty drawback income. I think that would suffice. Yes, thank you. Definitely would send the PPT. Then duty drawback to be disclosed in 9C for reconciliation. Yes, which is sir. Yes, there definitely unreconciled turnover you will come. It would be better if you can give the reasons for that. That is a 6A 4,50,000, 6H 2,50,000, 6O 2 lakhs. Okay. 7 reversals 3 lakhs. 7J. See, what I'm not getting is Then, sir, you have given that table 6A is 4,50,000. Table 6H is 2,50,000. So 6O will reflect 2 lakh. But the reversal is 3 lakh means that only I'm saying you should give it gross there. It would be better if you can also give the GST 3B figures, table 4A5, table 4B2, table 4D1. That also, if you could give means, I think it would be better for me to answer, because I think you had a different perspective to say that the net reversal only should get reflected in table 6. That should not be the case, actually. So you please send that to. I'll just check and let you know. Thank you. Vijay, sir, yes, it's coming, sir. It's coming. The ETA summary is coming as of now. I have not faced any specific errors with respect to any claims. I think it's coming. It's correctly reflecting in table 8 also. GST 2B is reflecting in table 8A. Yes. Circulation, definitely PPTs will be shared. You please share the mail IDs. I will definitely share the PPT. Okay, thank you. Thank you everyone for having this much patience on a Saturday evening. Wish you all a very, very happy filing. Tuesday is the last date. I hope everyone would have completed a majority of portion of GSTR9, and only the double check is pending in your side. If there are any queries regarding GSTR9, or if any help is required regarding GSTR9, you please reach out to us. We would be working tomorrow too. So please reach out to us. We'll definitely revert you back. Wish you all also a very, very prosperous and happy New Year 2025. Thank you. Thank you for your continuous support to the Zen Tax Talks. See you in another session in a fresh year. Thank you.